Hi, this is Paul from globaltradingsoftware.com, and this is an earnings play. So it's a stocks tutorial video. Now, a lot of people have sort of dismissed earnings over the last couple of years because of COVID and everything else like that. But I just wanted to touch base again to allow people to understand what could happen and get that starting point, end points. And I'm going to be using the Auto Harmonics today. This is a trading view version. Got a lot for a lot of indicators, but the harmonics is, these are quite complex patterns, but the software simplifies that for you. But also on a longer term, when these patterns do happen, they are very, very strong. And this is a daily time frame, but also we're going to be looking at some major support and resistance zones. So framing that chart's very, very important. So we're in October 2022, so I want to go back to the beginning of 2020 and look at some of these sort of major zones, if you like. So one of the things I'm going to really pick up on is this crab pattern here completed in the automated completion zone, and the resulting bearish trade was a great trade. So this D pivot is very, very strong. So we need to make sure we look left. Lots of clustering around here. So let's just mark that off here as well. So all of this clustering we're taking into account just here with the D pivot there. And then when we look left again, because we can only look left, we can't look right, we've got some clustering in there and in here. This is a really strong sort of price, a zone of price which institutional traders make decisions. So this is very, very important. We also then, as we move forward in time, we get this this big pivot just here where the bat started. So again, looking left, we've got big move up into here and then a push down. So really, really strong resistance in this case. And then we got the start of this crab pattern just here as well. So another pivot there. So this is a really strong support and resistance zone. And then obviously recent price activity gives us some highs that we need to look at as well. So that's just framing that chart to see how we behave going into this current earnings. So last year, beginning of 2022, we come up, get these highs, and a lot of that was to do with Ukraine-Russia war. Obviously, defense stocks, Lockheed Martin, this is does take that initial bounce with those, and then we come down, we test that support and resistance zone we put in, and then we form a bat pattern. It's a harmonic pattern. Again, you don't need to understand the mechanics of this. The software does all of that calculation in the background. You don't need to understand that. What you need to understand is when we get this bat pattern form and it completes in the automated completion zone. So the completion zone is a lot of calculations on overlaps of fib retracements and extensions. So those overlaps come from the ABC, and then basically what the software does basically says, if this bat pattern completes in this zone, there's a high probability it's going to go long. So we've got earnings Tuesday the 18th of October coming, that came. Leading into that, we know with the D patterns completed on the auto harmonic there, we've moved up, we've formed a pivot, we've moved down, and we've tested this auto completion zone again, which is again fib overlap zone, but this time we've got a higher support. So if I just put down here, the D pivot's down here, and then we've got this higher support just before earnings going into here. So this is looking good. So we got a higher support. So it's moved up. We've formed a pivot just here. We have higher support here. So the earnings play is relatively simple for me. I don't look for a long-term play here. I look for an entry point, and let's be honest, it's failed at this before. So the entry point needs to be just above there. So it needs to be sort of like 419, 420, that sort of thing. Just around about there. So that's our entry point. So earnings reaction now, in that we've done all of the work. We see that this is a strong support zone here. We've got another sort of medium sort of support here, which has actually held here as well. We've got a pivot, so we've got a start line, and we've got some targets, the C pivot of the back pattern and the A pivot of the back pattern. We've got two targets, if you like. We take half off at this, and we take the second half off at the A pivot. Very, very simple. This is not a long-term investment. This is a trade, a play on earnings, and you're just playing the reaction that the markets have to that earnings. So if it goes down and short, there's no play for me, because harmonic pattern completes in the automated completion zone. Everything's coloured in green, so you're only looking for a long. The long play is sensibly above this pivot, okay? That's the entry. We've got a target 1, which is the C pivot. That's hit on that same day, okay? The following day we gap down and then push all the way through target 1 and hits target 2. You take the rest of the position off. So it's only on for 2 days. I mean, it could have been on just for the day, depending on whether you want to just offload at that first C pivot, or in fact, if the price action would have taken it up there. So it's about setting the scene for so whether it's Elliott wave, but in this case I've used harmonics because Elliott wave is more to do with a pullback against a trend. This has not been trending because we're in times where stocks aren't trending. Certain sectors are doing better than others, but again, earnings, this was pretty obvious to me that Lockheed Martin has been selling arms to the US, to the UK, to European countries, who are then supplying them to the Ukraine. So they are going to most likely make some good profit. So that earnings, not exactly a given, but again, we've set the scene. We've put our support and resistance zones in. We understand that the software has given us a really good green light for a long, because the back pattern is completed in the automated completion zone, and that then crosses with a major support and resistance zone as well. This is all looking good. Since then, we've moved up, we've formed a pivot, we've pulled back, we've got a higher support zone just before earnings. It's obvious where the entry should be for the earnings play, where the first target is, where the second target is. We get the earnings come out, earnings reaction, big move up, takes us in, first target taken out, next day, second target taken out. It should be that simple. Remember, the software does everything behind the scenes with that Auto Harmonics, but the main thing is, for an earnings play, you need to set the scene. You need to understand the support and resistance zones. You need to understand that pattern for the last year. What's happening? Where are we most likely to go? We've not got a crystal ball, but looking at that scene, setting that scene using good technical analysis, there is a high probability in this case of a good long. So hopefully that helps. Check out the links below for the Auto Harmonics, not just for TradingView, but for lots of other platforms. They will help you when you're looking at those earnings plays, but also for swing trading stocks as well.